we've been absolutely positive on crypto, but I want to get your take on this, Graham. All right, so we're super positive on crypto. Future looks bright, but Graham, is the golden age of crypto over?
Welcome back to another episode of Token Narratives. I'm Graham Stone, joined by David Sensel as usual. We're going to get into it here, starting off with a little price action. So we had a little bit of a dump, followed by a pump. Right, we had this on Monday, Asian hours. There was a pretty brutal sell-off. Bitcoin dropped like 5-6% in a couple hours. So what happened there, I think, or well, the talking heads people love to have come up with reasons for why these things happened. But it seems like what happened, and David, I don't know if you have any thoughts on this, but it seems like what happened is the markets got spooked by the Japan rate hike. So basically, it's the yen carry trade deterioration fear, i.e. when rates are higher in Japan, there's less money available to pump risk assets. Bitcoin, of course, being a bellwether for risk assets and liquidity conditions, reacted most violently as usual. And go ahead.
Well, it's just, I mean, I've been really, really, really busy this week with MENA, which is coming up next week. So I haven't been able to really sink my teeth into this yet. I hope I will be eventually. But there seems to be like two, from the people that I follow, there's like two basic camps, which is the drop was caused by the Japanese rate hikes, and okay, so both say that the drop was caused by Japanese rate hike news. One camp says this was a legitimate concern, and then the other says no. The people who got drawn into this or panicked by this are macro tourist retards, and they don't know anything what they're talking about. So I don't know. I haven't been able to get into the actual reasoning behind the second one, but I think I'm probably inclined to believe the latter. That and also, like, you look at the market reaction, it does seem that this was just a bunch of idiots reacting to things that they don't really understand. I am one of those idiots, by the way. I'm not saying that but yeah.
I mean, if you're a smart trader, you could be like, okay, the markets thinks this is bad, so I'm gonna front run that. I'm gonna sell right now, and then I'm gonna buy the dip when because it isn't actually that consequential, this yen carry trade thing. Why is it not consequential? We had the big yen carry trade scare a year or so ago, and supposedly people have kind of unwound that. It's not nearly the risk that it was at that time. It was much more highly leveraged at that time. This is back when I believe the Silicon Valley Bank scare was happening. And but nevertheless, there's this narrative that when the Japan Central Bank raises rates or indicates that it's going to be raising rates, that's bad for the yen carry trade, which is bad for risk assets. So yeah, that news just sort of, it's like a self-fulfilling thing.
Yeah. And also, this also coincides with a lot of like Japan-related economic data that at least on the surface makes people wary, right? Like you have the stimulus package coming out. So Japan's going to be presumably printing money. And all of these things are happening in Japan, and I think a lot of people, I think most people, don't really know how to reconcile these things, right? So you have Japan starting to start printing money, and then you have them saying that we're going to raise rates at the same time. This is usually not normal activity, and you see a lot of, I think, macro analysts being like, "Oh, look, Japan's broken, Japan's doomed. Look, this is going to be terrible." And so I think all of these things kind of combined to scare people for that couple hours. And then you have other I think analysts slash financial traders who have more experience in this, and they came out later and kind of were trying to parse what actually is happening. And so it's not as sky is falling as I think the initial reaction would imply.
Right. So we had that dump, and a couple of days later, we had a pump of pretty much equal proportion. Actually the biggest 24-hour pump on Bitcoin since I think May. And this is interesting. Okay, so what caused this? Maybe several things. Maybe nothing. Maybe just technical. Maybe it's like this was a double bottom, as happens with like charts. But anyway, so some potential catalysts, some news here. Like we had Vanguard. The news came out that they started allowing their clients to buy the Bitcoin ETF, or they will be allowing. This is Vanguard reversing years of opposition, opening its $11 trillion platform to 50 million clients. So that was a pretty big move. Eric Balkunas commented on that. He said, quote, Bitcoin jumps 6% right around the US Open on the first day after Bitcoin ETF ban lifted. Coincidence? I think not. Also, $1 billion in IBIT volume in the first 30 minutes of trading. Now, around the same time as that, we had other news coming out, which is that Bank of America authorized its 15,000 advisors to recommend Bitcoin allocations up to 4%. Another one is Charles Schwab says it will now offer Bitcoin Ethereum trading starting in early 2026. So
yeah,
several TradFi players, sort of the last holdouts, I guess, saying like opening the floodgates to Bitcoin allocations on their platforms.
The Schwab one is probably the most interesting at this point because it's not exactly clear in what way they're going to offer trading. But again, Balkunas has commented on this, and he said, "We knew this was coming, but it's there's a big question around this. What is the fee, right? Schwab has free ETF and stock trading. If crypto is also free, then look out Coinbase, right, and other centralized exchanges, right? So in fact, he says, hell, anything under 50 basis points. I was going to say bips. I know you hate that. Anything under 50 basis points is a big threat to crypto exchanges, right? So again, this could be something that we're paying attention to a lot, Graham, in 2026, which is if you have these like major firms. Oh God, hold on a second. That was awful.
What happened?
Someone was calling me. My wife was calling me.
You. Busy man. Busy man.
Insane. Yeah. Anyway, if you start to have these major platforms offering trading, like especially like if it's like spot trading, but even if it's not spot trading on their through their online portals, like Charles Schwab, this does seem like a viable competitor to traditional centralized crypto exchanges like Coinbase and Kraken, you know? And so this could be where the new what's it called, competition war is next year. That would be pretty wild.
Yeah, I like that. Always good to see more competition against Coinbase. I don't really like their dominant position. Although obviously, well, in both cases, people aren't holding their coins. So at least, centralized exchange competition in the centralized in the custodial realm is good.
Yeah. I mean, I personally hate all these platforms. I of course belong to some of them because I'm an American citizen. So I personally hope they wouldn't win because they're so. There's just that bias, bias growing up with these things, these dinosaurs who have been just so incredibly extractive. I feel like, but it would be nice for them to make exchanges, for example, Coinbase, a little more competitive, right? So that Coinbase might have to lower its fees and things of that nature, and improve its UI UX, which is terrible, some of the worst I've ever experienced ever. So
yeah. By the way, David, I'd like to get your thoughts on this. There's a conspiracy theory floating around that basically Wall Street purposely fudded the market over the last couple of weeks here. For example, JP Morgan issued that report pointing out that the MSCI rule change there, the one that would prevent MicroStrategy and other digital asset treasury companies from being included in passive indices. So that and a few other pieces of on the breadcrumbs on the conspiracy trail, where Wall Street is purposely fudding the market leading up to these announcements that they're going to allow their clients to use, like, to buy Bitcoin. So they're purposely fudded the market, drop the price so that they and their clients could get in at a better price.
Yeah, I mean, honestly, this could be true, but I don't think it actually matters, right? Like, so to me, this wouldn't be conspiracy because it's the classic, as the title of this live stream implies, right? Oh, bullish news is bullish again. I feel like that we've been being fairly bullish this whole downward thing for the past month and a half since 1010. And pretty much everyone, all the podcasts and pundits and things that are in crypto that I've been talking about have been as well. And there has been good news this entire time that we've been going down that we've highlighted. You know, it's just that for whatever reason, and it's probably just because of there's just more sell pressure, right? It doesn't matter. And so I think if you're like in a raging bull market, right? Like if we were in a trending upward bull market, none of this like MC, like the JP Morgan thing would have mattered, right? People would just shrugged it off and like, yeah, whatever. There's so much bullish news. But when you're in a downward one, it's like all the positive things that we've been talking about for the past month and a half is like, yeah, no, that doesn't matter. But you know what? That does matter is that JP Morgan thing. Wow, that's showing it. So I mean, I think Morgan could have done this on purpose, but it really wouldn't have mattered. It didn't direct markets, basically, is what I'm trying to say. Because
all right, gotcha. Now, David, here's another hopium, I guess, thing, chart magic hopium thing that I'd like to get your thoughts on. So I've got this chart here, and it's posted by Joe Burnett at III Capital on X, and he's posting this chart, right, which has the price of Bitcoin here, and he's saying, look, what if the launch of the Trump meme coin, what if that was the top of the cycle and we've been in a bear market ever since? Well, if that was the case, it's been like pretty much a year now since then. And the average Bitcoin bear cycle is like a year or so. So you could argue that we're actually now, maybe we've hit the bottom and we're coming out of the bear. And so we've, like, far from the cycle being over. It's long been over, and now it's time for the next bull cycle.
Yeah, so I've heard this kind of idea has been kind of percolating on CT for, I don't know, a couple of weeks or more. I've heard different posts about this. I think there's a lot to this. I think the only thing I would kind of quibble with is the terminology, but that's, who cares about that stuff. I don't think it's been like a bear cycle, or you know what I'm talking about. Like, it's just been flat. Or if you take Bitcoin as the bellwether, it's just been kind of flat, consolidating for this entire time. So maybe a mid-cycle slump or whatever you want. But if it's, whatever, if you want to say it's been a bear cycle for this year, sure. The overall gist I agree with. I think that kind of makes a lot more sense to me than the like, oh, this is the end of the 4-year cycle kind of stuff. And I think I am very, I think I've been consistent in this. Is just all the things are lining up. There's so much good stuff, I think, happening soon or happening right now that I don't think you can really be bearish medium to long term yet. So I wasn't bearish this year. Maybe that was a mistake. We can talk about that when we're like looking back on this year. But I still think that that there's a lot ahead. So yeah, I that view makes a lot of sense to me. What about you?
Yeah, well, let's talk about some of the things that are ahead, some of the bullish indicators. So obviously we've just talked about some of these big TradFi players who are now like getting into the market or allowing their clients to get into the market, allowing the advisors to recommend up to 4% allocation of Bitcoin. Very bullish signs. Beyond that, we of course have that quantitative tightening, QT, is now over, and so we're now moving into a quantitative easing. Although on this front, most people are saying it's not going to be anything like the quantitative easing of the past. It's going to be more of a slow grind. However, there was a $13.5 billion repo injection just a couple of days ago announced. And this is the second largest since COVID and bigger than anything seen during the .com panic, although that last comparison is a bit weak since that era is quite different. That's like over 20 years ago. The scale of just money sloshing around now is such that any moves now are bound to to dwarf anything that happened back then. Anyway, so we've had this repo injection, quantitative tightening ending. You have bulls like recently Tom Leaf, the bit miner guy and the perennial bull. He's saying when QT ends, markets rip. The last time the Fed stopped tightening, risk assets jumped 17% in 3 weeks. So yeah, Tom Lee thinks Bitcoin benefits most because liquidity improves, the dollar softens, and risk appetite expands. And he's calling for a new BTC all-time high by as early as late January.
He keeps moving it back. I mean, I think earlier, like at the end of November, he was like all-time highs before the new year, right? Like, I'm pretty sure there was a quote from him,
yeah,
like a month ago.
Okay. Now, the other big thing I think is the Fed. All right. So obviously, we've got the rate cut coming in. I believe December 9th is the meeting when the meeting is scheduled for. Pretty much guaranteed we're going to be getting a rate cut. But and that's pretty much already priced into the markets. Nevertheless, when it actually does happen, it'll be good for liquidity. But the real question is what's going to happen next year and beyond with the Fed. Now, I was listening to one of my favorite podcasts. I know it's yours as well, David, Bits and Bips.
Probably
And
my favorite,
Alex
number
Kruger,
one.
yeah, Alex Kruger, who is my favorite guest on the or co-host of that show. He came back after a long hiatus, and he had some very interesting thoughts on the Fed. So that I'd like to just see if I can describe here and maybe get your thoughts on. So his argument is that the Federal Reserve is about to undergo the biggest philosophical shift since the Paul Volcker era in 1979. And that's because Trump is expected to appoint a new Fed chair who is a supply side economist. So it's probably going to be either Kevin Hassett or alternatively Kevin Warsh. Both are supply side economists. So what this would do, according to Alex Kruger, is it would fundamentally shift a few things. First of all, how the Fed interprets growth, how the Fed interprets inflation, how restrictions or expansions of monetary policy are justified, how it builds its internal models. It's going to shift a lot of things. So currently, the worldview of the Fed is that it's built around a model with a speed limit for growth. So if GDP goes above 1.8%, I think that's their target, the Fed assumes inflation pressures appear. Therefore, they must tighten their policy, i.e., raise rates. So this reflects traditional demand side logic, something about a Phillips curve. I don't really know what that all is. This is, I'm getting an assist from the machine here. But the by contrast, the Hassett Warsh supply side economist worldview reject the idea that high growth is automatically inflationary. So they believe high growth can come from productivity, not overheating. They think the U.S. can and should push for more growth without triggering inflation, and that the Fed should not slam on the brakes when growth rises above the model's speed limit, right? So they want higher growth, more output, more labor supply, more investment, higher immigration, things like that. Now, this is likely to be enormously consequential for markets and in a way that benefits equities, long duration assets, Bitcoin, and risk assets generally. But all of this is only going to happen once we get certainty around who is going to be the Fed chair and whether Powell actually will step into the shadows, or he might actually, although his term as chair is up, he might actually stay on the board, which would affect things by basically not there. It would there'd be one more, I don't know, one more demand side guy on the board. Anyway, so this whole theory, right, is like that the Fed is going to likely to undergo a massive shift that will enable higher risk assets to do better, even when the economy or when GDP grows above that speed limit.
Yeah, I mean, I that all makes sense to me. I can't wait to listen to this part of the conversation. I haven't had the time to do that yet, but I do know that Bessent has been very, very clear, and some of other Trump's other advisors has been very clear that they are trying to kind of not radically change, I think that's the wrong word, but kind of change the path of U.S. monetary and fiscal policy. And honestly, I think for the better. Or I think this is long overdue. And there are going to be lots of outcomes to this. It sounds like this is going to be on the Fed side, but there's also a lot of things that are happening on the Treasury side. And also, I think you're going to see I think many people are predicting and they've kind of been open about this, that the Fed and the Treasury are going to be working a lot more closely together to kind of implement these much needed changes. I think, I honestly, I think they have the right people to do it, and I have a fair bit of trust that they have a good chance at doing it. So I'm looking forward to seeing how this plays out. I think the other big thing that I've been thinking about, and I haven't really put into words yet, but you've kind of seen it in some of the topics I've chosen to write about in my newsletter, but also talk about on Token Narratives, is I think that we're going to start to see a this zeitgeist acknowledgement from people, from young people, but also people like millennials and downward, of where they want to put money and what they need to put money in to. And you're already starting to kind of see this shift, but I think it's going to accelerate. And I believe 2026 it'll really accelerate, and that will be very beneficial for crypto. It'll be beneficial for other like assets as well. But this idea that that you can put money in what I would classify as traditional boomer assets is really starting to take hold, and I think it's going to be a major narrative in 2026, and that will benefit things like crypto and gold and maybe some other things. I think it'll be less helpful for some of the bigger traditional equities like the Mag 7, right? Because they're already so valuable. So anyway, that's another positive thing I think that we'll see in 2026. And the fact that it's taking up so much oxygen on my timeline inside and outside of crypto Twitter, to me is a big sign that this is. And again, I was surprised at it. It's now a major talking point, even not amongst dirty hippie liberal far left extremists that live in New York. You're seeing like Patagonia wearing, vest wearing financial people on Wall Street talking about equity inequality in America. That's like, whoa, okay, this is now a major concern, and it'll have repercussions, I think, very soon, especially in 2026. The last thing, which is the boring piece, is that the institutions are here, right? The institutions are coming. That's done, right? This is we're like the fact that Vanguard, Schwab, Bank of America have kind of said this. That phrase is done, and it needs to be retired forever. The institutions are here, and 2026 we're going to just see the growth that we've seen this year, which is just mind blowing. I can't wait to look back on this year, Graham, because it's just hard to imagine how far the U.S. in particular, but the industry as a whole, has come in 1 year. Next year is going to dwarf that, right? It's got to, right? The institutions move slower, they deploy slower, but holy moly, that glacier of capital and infrastructure via regulation and all that institutional sophistication is just gonna come through in 2026. All that stablecoin stuff, prediction markets, you're seeing privacy become talked about by like what I would consider mainstream folks. Like, I don't know if you saw Tim Ferriss. He was talking about that for predictions.
Not see that
for 2026. He was excited by crypto, I think, like 10 years ago, and then he kind of hasn't really talked about it since then. Right now this has kind of caught his interest again. So I mean, I really do think that you're going to see this ramp up, and boy, there might be like an inflection point in 2026 where it's just stablecoins are everywhere. People have instant access via stablecoins to crypto assets through their various apps. I mean, it could just be from like it's one of those, I forgot the name of it, but there's that moment where you just have enough. There's enough. There's like no change, but then it just ticks over enough, and then suddenly it kind of
critical mass.
There's another word for it, a psychological word for it. I'm forgetting, but yeah. What was that news that I saw that I thought was really, really cool? That was that Klarna, right? Is allowing it's making a stable coin. It has like 155 million active users in the US, and it's allowing merchants to get stablecoin access, and it's incentivizing merchants to pay out and accept stablecoins. So getting interest not just on the consumer side, but on the merchant side. All these things are going to be coming together next year. And once you get like the banks interested in stablecoins, and you get the merchants selfishly interested in stablecoins, right? It's gonna you're gonna have stablecoins everywhere. And I do believe once you have access to stablecoins, real stablecoins, it's just so easy to then just jump into any other crypto asset.
Yep. All right. So technically, there might be some downside here in the near term, but all the fundamentals are pointing towards continued positive vibes for Bitcoin, especially, but also crypto, I think. Now, maybe this is a good time, David, to shift into the continuing debate on how to value layer one. So last week...
Wait. Sorry, do you mind?
Yeah.
I think
go ahead.
There's a slightly better segue. We've been absolutely positive on crypto, but I want to get your take on this, Graham. All right, so we're super positive on crypto. Future looks bright, but Graham, is the golden age of crypto over?
Okay, let's talk about that. Yeah, so that's I read this. Was it a Substack?
Yeah, I think it was an X article. Yeah.
So
or Substack.
This is the guy talking about how he compares it to the golden age of poker, and in the early days of online poker, it was easy for anyone to do well because there were just a bunch of people who didn't know what they were doing. And same with crypto. In the early days of crypto, it was easy to make it because there was just a bunch of people bumbling around. And that has eroded. And it's so the golden age of, I don't know, like 0 to 1 million in crypto, just like the golden age of online poker, making hundreds of thousands a month there. They are over. I mean, sure. Makes sense.
So I think the thing that is interesting to me is like the golden age of crypto. To me, what he talks about is basically like for mid-curvers like myself and maybe you.
Definitely me.
Our ability to get that lottery ticket and turn our $1,000 into $10 million. That's done. That ain't happening anymore. The thing that maybe attracted a lot of early heterodox / test people to crypto, that's done. You're not going to see those kinds of returns. Don't even think about getting those kinds of returns. If you do that, you're going to lose all your money, and you lose all your money to the sophisticated, institutional, smart, super awesome people coming in to get it from you. So that's the basic thesis. The second part of that is even if you're really smart and you have an edge, it requires so much effort. It requires domain expertise, and your payout is not going to be what it used to be. So even for those people, the golden age of crypto is over.
Yeah. Yeah, and actually, reading that Substack or that article, it reminded me of this other post that I came across earlier in the week from Justin Wu at Hackerpreneur, and he just talks about how not too long ago you could, for example, swap, like talking about airdrops, right? You could, back in 2021, 2022, you could swap once and get a 10K airdrop. You could bridge once and get a 5K airdrop. Touch a test net, get life-changing money, right? For example, right? Now it's like, okay, you got to swap 200 times, stake for 6 months, farm 50 quests, cross-chain bridge until gas drains your soul, verify identity, prove humanity, defeat 3 Sybil bosses, solve 12 CAPTCHA templates, and bow to the multi-sig council. Congratulations, you qualified for 28 tokens locked for 4 years worth 29 cents. So the conclusion is that airdrop farmers are now being farmed by the protocols, which I like that. Yeah.
Well, so I think there's two parts to this that's interesting to me. I think the first is I think if let's say we get an alt season, we haven't. I would argue we haven't seen one, but let's imagine that we do get a proper alt season. Let's say Bitcoin goes up, I don't know, 250% in like 3 months, something like that, which usually precedes. That's usually kind of what you need to have an alt season. You don't think we're going to get like 10x's or 100x's easily after that? Like, do you think that kind of thing is done?
What do I think?
Yeah. Like alt, basically like alt seasons are done. Like that kind of alt season is not going to happen again.
I don't think so. But I think there will be continued eras where alts perform better than Bitcoin. Like Bitcoin dominance goes down and alt dominance goes up, but it's not going to be throw a dart at CoinGecko or whatever, CoinMarketCap, and get generational wealth. It'll be very select protocols, narratives. So keep watching token narratives to get the inside track.
Okay.
Yeah, that's what I think.
And then the second thing is, do you think that because so we've talked about before, and a lot of people have said this, like all the speculators are really retail, right? They're not playing crypto anymore, because I guess people intrinsically know that this is true, that the golden age of crypto is done, or this like lottery ticket kind of style crypto is done, and so that's why they're not here. They're off playing the AI stuff and biotech and things like that,
quantum.
But don't you think that all those people can come back at some point, and then you would get that kind of thing happen in crypto, or no?
No, it could happen again. Yeah, it could happen again. No, you're right. You're right. So, don't write off alt season completely, but you're still going to have to be. It's not going to be as easy as it was, and you're still going to have to be, because there's 100 times more tokens now than there ever were.
Yeah.
And the market players are much more sophisticated. The participants are much more sophisticated. So you can still make money in online poker. I don't think that analogy is perfect, because online poker is a very specific thing. It's one game, right? There's a lot of games in crypto, and so I don't think online poker forever is done. The golden age of online poker forever is done. But there can be pockets of for altcoin fervor again here in the crypto space for sure.
Yeah.
And who knows what it's going to be? Like AI, I don't know. Recently there was a bit of a mini narrative around neobanks, crypto neobanks with tokens. I saw some tokens pumping. EtherFi has done really well. There's a few others. A new one came out called Avicii. It's long since gone into absurd market valuation territory. I'm not recommending anyone buy that token. just saying that these narratives, they do have potential to, offer 10x's.
Yeah. The only, again, not to repeat myself from episode to episode, but the only thing that I think is so hard now is that the narrative cycle is so absurdly short.
Yeah, exactly.
Where they would last weeks or whatever, months, maybe even. Now it seems to run out in like 6 days, 5 days, or whatever it is. So
yeah. So
anyway,
set your what do you call it? Set your market, your stop orders. At like absurd levels, and because you're gonna miss it. I mean,
yeah, exactly. Yeah,
the dump will be over before you even realize there was a pump. All right, let's talk about this continuing debate on how to value layer ones. So last week, David, we brought up Hasib's viral article, where he basically passionately argued that you're not bullish enough on like the network effects of like L1s, and it's exponential growth coming here. So on-chain's going to grow 10,000x, and the L1s are going to benefit from that, right? That was basically the argument. Now, there's this post from Ryan Berkmans, which you put in the doc, David, and it's an ETH bull post. Basically, this guy's critiquing Hasib, and he's saying, "Yeah, you're directionally right, but you're a fool to compare Solana to Ethereum, because Ethereum is the only real winner here."
Yeah,
and he says, quote, "Your L1 token, or any token that has insufficient independent cash flows to qualify as a DCF cash machine, is worth what it's worth because people believe it is. That worth will grow or shrink depending on the sustainability / trajectory of that belief. No more, no less." So I feel like I'm not sure why this guy thinks Ethereum is so much better. But
okay. Well, hold on.
Yeah.
I also wrote something about this because I think it's an interesting thing. So he says, okay, Ethereum is the overwhelming favorite because over Solana, right? So you have ETH, Sol, and then you have a bunch of like newer projects. And this guy's saying is that Solana's highest value, biggest differentiator, thing that made it valuable compared to Ethereum, is basically coming to an end, right?
Yeah.
Solana is this like super hyper performant chain. Why is that value coming to an end? Well, it's being attacked from newer, even more performant chains. So you have app chain specific things like Hyperliquid, which have definitely eaten into the market share and shown why do I need like Solana general purpose? Then you have general purpose new entrants like EVM compatible Monad, right?
Yeah,
and
ETH, Mega ETH,
crazy fast L2s like Mega ETH. And he's basically saying is like this attack on Solana's one valuable differentiator with Ethereum is going to only increase, and it's not going to really affect Ethereum, right? Because that's not Ethereum's main value proposition. And also Ethereum kind of uses that now. So this is basically going to have Solana. It's like the USDC thing that we talked about before, which is USDC is going to get its market share eaten by all these new stable coins coming out, and Solana's market share is going to be eaten by all these high performance blockchains coming out. His second argument is that the L1, L2 model that Ethereum went on might have been early, but is maturing. And you can see this by the viability of base and the excitement / technical performance of things like Mega ETH, and then app chain specific things.
And then maybe to add to that, we've got the Fusaka upgrade on Ethereum, which basically it seems like what that's going to do is drive more fees from the L2s to be burnt burnt on the main net. So people are saying that it's probably going to push Ethereum to be net deflationary again in the near future, basically making the L2s pay more. By the way, that the fees are like I don't know. Sorry.
Yeah.
By the way, the blobs and more fees pay. I don't know. It's a bunch of nerd stuff, but
nice.
Supposedly, this is a big change for Ethereum that's going to improve its tokenomics.
Yeah. And I think maybe even more important than the details are definitely very important for this upgrade, is the fact that Ethereum is responding quickly, right? It's been heavily criticized for the past 2 years, and rightly so. But here is like, I would say, definitive evidence that they've taken the criticism on board and they are now delivering. That's great. Okay, so then there's one last bullish thing for Ethereum, which is, it seems clear at this point that institutions are preferring Ethereum, right? And it's kind of like they're preferring Ethereum, at least if you believe what they say, for the right reasons, which are these cypherpunk, neutrality, decentralized, doesn't go down reasons, right? It's basically the reasons of like, well, if I want to build something that I have control over, then I'll build it, right? Like if I'm going to be into some like closed ecosystem, or if I'm going to be in an ecosystem where someone can shut things down, then I'm going to build it myself. But if I'm going to build on a so-called open system, it's got to be really open, right? So those are the big things. And I was wondering if you wanted to play this Eric Voorhees thing that I saw yesterday. Did you listen to this?
No, let's play it.
It's under the bullish Ethereum case at the very bottom.
Yeah,
it says Eric Voorhees. This also to me was a big sign. I was like, holy smokes. Maybe Ethereum, at least from a narrative angle, Graham, I think they're starting to track.
Yeah. Let's play this clip, but I am starting to get a little bullish on Ethereum again. But although I have my reservations, let me play the clip. Hold on.
Yeah, this is not financial advice, and I think I've told everyone, I sold all my Ethereum. I haven't bought any back yet, but I am also thinking like there does seem to be some narrative lift here, and it still has the problems you're talking about. Like, why does that make ETH valuable? But again,
does that
exactly?
Like, it hasn't mattered in the past. It hasn't mattered in the past.
Exactly.
Will it finally start to matter, or I'm just going to be sitting on the sidelines here, like coping, like it doesn't accrue value to the chain.
Well, okay, like play the clip, and then we can talk a little bit more about that. But yeah, I have some thoughts.
Close to unassailable. ETH is still the king. I don't see it being dethroned. I think it has had its various scaling challenges. The patchwork of L2s and the UX problems between them sucks. But I have a suspicion that base is going to end up becoming the predominant L2 on top of the predominant L1 of ETH. Both Bitcoin and Ethereum have achieved a network effect that is close to unassailable. ETH is still the king. I don't see it being dethroned. I think it has had.
There you go.
Yeah.
Eric Voorhees.
Yeah. And I think it's again, let's just take it from a narrative perspective, right? So ignoring, I would say,
forget about the fundamentals.
Exactly.
I mean, that's the whole point of Hasib's original post as well.
Yes.
Is don't Don't be mid curve on the fundamentals.
Yes.
Stupid.
Yeah.
So yeah, no, I could see myself jumping back into a bit of ETH here, but I would but that's only for lack of me seeing another like app specific thing that has the right tokenomics. If that came along, I think that's a faster horse to back. But the question is like, what is it, right?
Yeah.
And so ETH is like getting back into this smart contract world, Web3 thing. Via ETH is just like the easy thing that like people don't have enough time to think about. Maybe institutions are the same. Just like, buy ETH, even though the tokenomics don't actually make sense. At least it could be deflationary finally again.
Yeah, I mean that would be great, but I honestly don't think it matters. Like that's not why. I mean, again, like the things that Santiago points out, right? The market cap of ETH is kind of absurd for what it does. Fine, and that's again as a mid curver, it kind of is like, how do I buy this at 3K? But there's a couple just on the narrative side. There's I think the biggest thing is ETH has been beaten down so hard, right? Like this was, you remember, like from 2023 to 2024, the steady lads, and then we talked about it as well. It's like, how low can ETH go, right? Is it over? Like, is this thing ever going to bottom, right? Like it was so beaten down, and everybody hated ETH, and they hated ETH for the right reasons. And there's all this problems and dysfunction. So it really does feel like, narratively speaking, like the ball that's just being held down under the water from a narrative perspective. And then once it starts to get any kind of lift, narratively speaking, it'll just kind of shoot up like crazy, you know? Suddenly it's the darling, everything's right. It's how are we so stupid? BlackRock's building on it and blah blah blah, you know, all the stablecoins are on it, this kind of thing, right? Like but then the one thing for me that I worry about, or I wonder about, is, does Base launch a token? And if it does that not hurt the ETH narrative a bit, you know?
Yeah. I mean, they've said they're going to launch a token.
So I guess it doesn't matter at this point.
I think it really depends on the specifics of the token.
Yeah. I mean, the best thing would be is if it was like equity, like Coinbase, like equity thing, like or something like that. I don't know. Anyway, I hope they do a good job with it, because that's the one thing that I think could really slow down this a bit.
Yeah,
is
that would definitely cannibalize ETH.
Yeah, and Base is like the cheerleader for Ethereum, and specifically the shining example that, yes, you see, this L1, L2 model can work. Look at this. This is awesome. So maybe that's the one thing I would look out for.
Yep. All right, David. I think we've done a pretty good discussion here. Do you have any other thoughts, things you'd like to bring up before we wrap it up here?
So the one thing that I forgot to mention is just about Vanguard. There's so much hopium and everything about this, but this was I think worth talking about. Was it Fred Krueger? Is this your guy? No, this is a different one.
No, that's Alex Krueger, but I'm looking at that same post, I think.
Yeah.
BlackRock versus Vanguard.
Yeah. So again, this is all just pure massive hopium, right? Like just injected into your veins, because it's like Vanguard announcing this is bullish enough, but this is like one of those posts. It's like, oh, but you're not bullish enough, right? So let me just read it. BlackRock versus Vanguard. Everyone says BlackRock is the biggest, and it is, but Vanguard is actually bigger in the places that matter most to Americans. Number one in U.S. retirement savings, number one in index mutual funds, number one in direct-to-consumer investing, number one in passive long-term money. The idea of Vanguard allowing and embracing BTC is huge. So there you have it. More and extra hopium about the Vanguard situation.
Love it. All right, so let's wrap it up, David. You're heading off to BTC, Bitcoin Mena in Abu Dhabi. I'm heading off. You're heading off tomorrow. I'm hitting the road the day after. We're going to be doing the weekly from the live news desk on Monday. We're going to be doing a live Token Narratives episode on Tuesday, I believe.
Yep.
We're going to have a bunch of prizes, golden tickets, given away by QR code that's just going to be flashing up on the screen throughout our live streams. You're going to be, make sure you get the wallet because once you have the Bitcoin.com wallet, you just scan that QR code. Whoever scans it first can sweep the Bitcoin from there. That's going to be our one of our giveaways. We also, David, have this other giveaway, which is
we have this DGen 1. We're going to give one away on each day in person. You got to be in person. We're going to be
an in-person giveaway.
In-person giveaway. This is my personal one, by the way, that I bought for myself. I actually really like this. I like it better than the Solana
Seeker. Really cool.
I like it better than the Solana Seeker, which I have with me right here too. But we'll give these away in person at the event. So stay tuned for that. That should be a fun little segment. We're going to be asking some questions and things like that, and you can get one of these.
Yeah.
Pretty awesome.
Yeah, we've got a ton of great interviews lined up here for the live news desk. I'm really looking forward to seeing Stefan Livera. Big fan of his podcast, as well as many. I think you're going to be interviewing a minister on Saturday or Sunday.
That's right. We're still working out the actual time, but it's happening. And
nice.
we're going to be interviewing kind of senior leadership with BTC Incorporated. They're the ones who are throwing the event itself. So I'm really looking forward to that. That's going to be awesome. And happy that they're obliging us with that. That's very cool.
Nice. All right, David. Thanks as usual. This was great. Got me bullish. Might actually buy some Ethereum here if I can.
Oh no, you're gonna yell at me.
Scrape some quarters off the.
You're gonna yell at me. You're gonna yell at me when it goes to 2,000. When Tom Lee sells some to recapitalize Bitminer.
Yeah. All right, that's a good place to end it. Have a great week. See you soon.